the No Nonsense guy published a thing about Elliott wave, which is a very Elliott wave's more of a psychological thing than a actual wave count, as far as what's going on during each wave and what's the characteristics. And typically, you want to trade wave 3. So, since No Nonsense doesn't understand what divergence is, if you're watching for wave 1, it's going to be wave 0 is divergence, wave 1 is the first price pull, wave 2 is going to be your Fibonacci pullback and stuff like that. And then wave 3 is going to be the biggest waves. Now, you either place a buy stop at the top of wave 2 and get pulled into wave 3 as it breaks out that, or you accumulate during the pullback, and when wave 3 takes off, that's the biggest wave. Wave 4 is consolidation. Wave 5 is the final wave, but inside of each wave is another wave fractally, just like any other thing. And because No Nonsense chooses to trade in the daily charts, he's missing out on the monthly, weekly, and 4-hour trades. Especially if he's using so-called indicators, that's giving him a signal. So I'm in the Discord. I couldn't resist. It's just too much fun. Of course, I'm not going to give up my phone number for this fucking thing. I already had to give my email up just so I could supposedly get in here. But you can pretty much, by reading somebody's question, see where they're coming from, what they're aiming at, and this idea of utopian perfection. Dude, I got a way to trade you wouldn't believe. No, I don't think there's one way to trade. And that's why I'm not saying there is one way to trade. I'm saying there's multiple approaches, but you have a trade plan for each approach. So you need to be totally thinking about, like, how am I going to get into that trade? Now, I like the signal, but do I pull the trigger when, and these are all, let's call them NNF. I guess you're supposed to use everything in a symbol now, so we'll call the NNFers. They're like, well, if NNF says it, then, and I guess is the problem I have with these kind of committee teamwork. Just put the quarterbacks on the field, let them go at it. And this also the constant referring to the big banks. Once they see your fucking algo, you're dead, buddy. You're. He says No Nonsense says, I can see when it gets to the trend line what's going to happen. The big banks are going to see that trend line too, and they're going to fucking take it the other way. All right, so that presupposes you're drawing the trend line at the trend, which is the closing prices, as opposed to the volatility line, which is the wicks. Okay, anybody that's putting up volatility lines and thinking they're trend lines doesn't understand a trend is price over time. That's what moving averages are built on, is a 1, 2, 3 period moving average. 3 period moving average being very fast compared to a 14. This out-of-the-box 14 stuff, I don't even know. Now, NNF doesn't talk about tweaking the ATR, I don't think. I know if you notice, Empowered Trading says they trade naked, but they always run a 7-period RSI, which is twice as fast as a 14, considered to be, okay. It's 7, there's 7 waves in the ocean, all this bullshit that has to do with nature supposed to be echoing into the market in some pattern or something. Okay? Maybe with enough drugs, it's all possible, right? But as you can see, if you watch last night's Euro versus Swiss, you're looking at that going, dude, this looks like a fucking earthquake in the middle of the desert, like it's the salt flats, and all of a sudden, boom, they're testing nuclear weapons. And if you're in that trade, on the right side of it, you're going to just wonder why you don't trade more bigger, and you would just annihilate the account, I would imagine. Well, maybe take you a long time to wipe out that much money if you were caught on a good move. So it's totally possible to jump in twice as big thinking, oh, I get it. It could move up or down. It moved down. I make money. I'm going to do that trade again. And now I'm going to go looking. I have a hammer. Everything looks like a nail. I'm going to go hunting down that trade. Not possible all the time because of the fact that the markets aren't always presenting that kind of setup. Wave 4 in Elliott wave is the longest wave. This is where people get beat to shit. the trend traders try to get on Elliott wave thinking, well, it's just another wave. No, wave 4 is consolidation. There's a 1, 2, 3 move that's surpasses the volatility of anything on the last 20 bars. Forward or backward. When you see a spike like that, where is it going to? What's it running through? So the market does not see time in the sense that it's totally compressed like market profile, although market profile is compressing each day. If you compress the whole chart, where has the market not been in a long time? That's a huge disparity in price. So there's going to be a huge reaction into that. People are going to lose their minds at that level. So you see, once it runs, then it's going to go 100% more. So if gold goes to 2,000, it would go to 3,000. So the ripple effect, you could also say it's fundamentally caused by the ripple effect of tariffs and people overexpansion, people getting all, oh, we're a growing business bullshit going, and it turns out they don't know what they're doing, or it turns out your parents happen to be in politics and they're hooking you up with Chinese deals. All sorts of shenanigans going on up there, and you can't blame your trade you're losing because Trump tweeted. I mean, dude, you should have made money from that. You should have had a scheme that could make money from no volatility and volatility. Now, no volatility is locking up margin that's not making any money. So in a sense, you're losing because you maybe could be in a better trade. If you knew how to trade, why aren't you in a better trade than that? Why are you sitting in a... Well, because you're a patient person, right? So there's all these elements people plug in, and actually being really dumb and patient would make more money in the market, because if you're really smart, Bill Williams will tell you, the smarter you are, the harder it is to make money, because you think, well, if I just tweaked it like this, next thing you know, you're chasing your tail because you can't get away from the fact that you don't fucking know what's going to happen next. People don't want to accept it. But you could also say that is an advantage, because now you don't have to work, you don't have to babysit it. You could babysit it, but are you the kind of person that can come back to the chart every hour and go, okay, yeah, I see the song, yeah. Oh, it's going to be like that this time. In other words, sure, there's a top that becomes a bottom, but is this what are we talking about, a 15 pip top become a bottom, or 150? So the trade plan you would have to run to make it even logical to make money, extract the most potential from that move, would be a 28 pip stop and a 14 pip stop, and everything in between. Somebody asked about how many tickets could possibly fill if you have pendings out there. Well, I would never keep track of this percentage, but after a while you figure out that another thing it does when you place orders, now you're focused on that. Okay, you don't have to shoot fucking animals running. You can place traps. So you can place bear traps and catch deer and anything you see, anything you want to catch. There is no law in Forex about playing dirty. Okay, so another thing, the no-nonsense guy kind of triggers me, like he's just like, well, the big banks are going to... Well, why don't you be a big bank? So I was watching Nick the Trader. I don't know if you know this Nick the Trader guy. He's like, dude, big banks are just, they're fucking legging into that shit. They're accumulating over a month of plunge. And if they're wrong, they don't give a fuck. They're on the other side of the other trade doing the same thing. So they just got maybe 3 techniques. But yeah, they got enough money, so, and they also have risk managers that come and tell people, dude, what are you doing? You're going to blow the whole thing up. But it's different than if you've got a car that does 100, 200 miles an hour and you're just a private citizen and you want to go, like, I'm going to go fast, watch this. Yes, you're going as fast as the guy that owns a fleet of these fuckers or owns the Miss Budweiser, but what is it, those people are paying a lot of fees. If they're charging you $1,000 a week desk fee to trade at a prop firm, I hope that comes with some type of amenities. I hope the girls are really lush and they're well clad and they're ready to go. The coffee better be fresh. I mean, but so it really depends on what you can handle stress wise too, because there's nothing you can tangibly do to change the reality of any choice that you've made in the market. These are just choices. These are not. You're not building a house and saying, "Ooh, looks like we're gonna need more." I guess it looks like you're gonna need more nails. If you got stopped out because you put in too thin a wood, trying to go, well, maybe we can get by with just like mesh. No, dude, you got to build a fucking I-beam. Are you fucking retarded? You know how much weight this thing's gonna have? All the toys you're gonna load in that house. To build a position or build an account, this is why you typically can only trade one currency at a time like that, because you're literally looking at it going, what the fuck can I do right now about this mess? And if the market starts to fill you on your first ticket, the first time you get filled at a discount where the market comes to you, so to speak, because you placed the pending out in advance, and you could just do that. Right now, you could have a robot. I have a script tester that'll throw the orders out there. These people talk about back testing all day long here, not realizing when the markets take off and go into a psycho trend or a super trend, all of your kind of you don't even get a chance to join the trend. I mean, you'd have to have a dynamic filter where, okay, let's go to the 2 period moving average, dude. This thing's fucking, dude, you can't get in. You better die. Take off your 50 period moving average and you better get to a 5. If you want to make money right now, but see, people don't, they're like, but that's not in my schedule. That's not my routine. I can't just jump on something and rape it. Dude, I got to have, like, say hello. I mean, I don't think most people have a trade plan ready to go when the market starts to take off and go, holy shit, I got the thing. Okay, I've had cameras for years. I don't think there's been a time I didn't say, I wish I had the camera right now. Okay, you're in your car, you look down at your fucking price chart and you're like, I knew we were going there. I knew the fucking price was going to go to 618. Whatever it is, I'll give you the 618 break. If you at least accommodate, there's a 618 around the 618 around the 618, you're going to have to put a blanket of tickets in there. Who the fuck's picking a fucking exact price? Who are these people? But yeah, it's very entertaining here, and I love the people are getting all fumigated about what the channel's about. So I love when the Discord Nazis come in and say, dude, you're being impolite. Young beef, kind of an Asian young beef, it looks like here. But to see people go on and on about it, now it is quite a daunting task to initially write the script, but once you have that, or write the robot, but dude, you got to be running 10 robots, okay? You running one robot? Dude, I think this is the bot right here. It's never like that. Talk to anybody that actually uses robots to make money. They would never claim you could have one trading algorithm. No nonsense. Yeah, but see, he's so filtered down that, and he has that. I was reading last night in the Discord here. I'm getting educated on candlesticks. The one candlestick rule. If she's really hot, man, forgot everything I said. So, I guess I look at trades as like, kind of a bad date if I'm losing. It's really tremendous if I'm winning. I'm like, I think this market likes me. Like, I still have the irrational, illogical feeling that I never thought the banks were out to get me, but I thought, I think the market's moving against me financially. And then I had being very stubborn. And of course, in the beginning, you could trade without stops. But, the first scripts I wrote were very stubborn. I had a 400 pip stop. I had to put a master stop of 400 on there. And then I had like, it would get into like 50K with a master stop. And that was my that's how I really lost a lot of money, actually, because I was manually trading up to that point. And I would say, this is a good scalp. Get the fuck out. You just made $20 in 20 seconds. Just get the fuck out. And then I would just start dancing with the market on 3Ks. And I thought, I want to be one of these lazy traders. So I did. I did make money, astoundingly. High percentage on my first iceberg order I wrote, where it's a hard click and it gets in like 100 pips deep or something, and it gets in a 20 pip psychotically. And it only triggered once in the time that I wrote that one script on this one broker where I was allowed to trade like that. And the news came out, the British pound, it spiked down. It had a super wide stop, so it was kind of like, end of the world stop. And I had scaled targets that were like 40 pips and 10 to 40 pips. So every ticket was a fucking winner. And the market, it happened so quickly. I watched the news come out, and I never saw the fill, and I did the tickets were just gone, and they were out. The broker honored them, and I did have some problems with them also, shutting me down. This is Hot Forex years ago. It shut me down. It's now somebody else. It's another company. But I thought, damn. That's because I had a bad script. Okay, so it just kept looping. I didn't know that. I wasn't doing what I'm doing now, and they don't loop anymore, so I don't have that problem. But if somebody's going to clear a trade for you and charge you a little extra commission, and I'm going to begrudge them. If I'm swing trading it like a banker, I'm running 100 and 300 pip stops, and I'm going to swing trade it. I'm also going to breakout trade it on the 4-hour chart. So, I can sustain I don't want to be down more than $1,000 on any one currency pair. I mean, okay, if I'm going to make 2,000, I'm down 1,000, it's no big deal. But if I'm going to be down like 300, I'm like, yeah, this is probably going to be a good trade. If I'm down 300, I must be really getting in. And of course, having them 10 pips apart and just waiting for Asia. If you're going to take a nap, then you're going to I would load at least 8-hour scripts. But see, I don't want to say that to people, and then they'll put too many limits in, and then they'll stress the account, or they'll blow that bank out, and they'll say that doesn't work. Yeah, it's only because you sized it and you spaced it wrong for the volatility that you suspect is coming or not coming. And if they don't fill it, they're not going to penalize you. Well, I mean, you get crazy, right? So every broker is different as far as how many tickets you can launch. That's almost more important than some other things. Like, of course, in the States, supposedly if you size them differently, which you could, they don't consider that first in, first out. Somehow the pecking order is by volume or something. I'd have to test that. But then I'd have to rewrite some of these. And of course, when you're writing 1Ks and you start to write elaborate scenarios in how the orders are going to fill and then go out, you could run them so they would run in the States, where you force that first ticket to get stopped out. So you're really dropping stop out tickets. Now you could trade bigger size at the bottom of the rack, though, so you get stopped out of the 1K, you come in a 2K. You could write a script like that it's United States certified. I finally thought about how you could do it. It's just that you really couldn't get a basket of tickets going. Now this Ryan Brown claims he's going to trade with Oanda. Dude, they're not going to let you fucking do that crazy shit. If it's first in, first out, it's like you're fucked. You can't take advantage of the hedging even. I mean, you can't hardly do non-directional trading. You got to pick a fucking direction. I guess you could do non-directional as long as it keeps stopping out the other ticket. But at some point, you have to amp it up. So you got to have fat tickets down at the bottom, fat tickets up top. Because when it gets there, man, you know that is the biggest, even though it's not on your time horizon next week and you want to make money in the next 2 weeks. Another situation is anybody that's trading, let's be honest, they're trying to make money now, in the now, not way down the road. And So for some of these people in this Discord, it's a godsend that they're testing instead of trading, building these EAs and shit. But yeah, I have the dream of the EA. I do. I wouldn't put so much stuff on it. Like these guys have a C1. I don't know what that is. Confirmation 1 or something. So it's just on, and they pull up stats, but nothing's going to get you around the gut feeling of feeling abused by the market. I mean, if the trade is going against you, okay, you've obviously studied more than anybody that you know. I would say anybody that's into this shit, they probably don't know anybody out on the street. On the internet, you would. But you can't go. Like, there's more people posting Forex from other countries now than ever on the planet. All you have to do is go to YouTube and type Forex and say, give me the latest update. Shit's in fucking Hindu. That's the first time in about 3 years I've seen people. The first one was a couple guys, and then it just like insane. But as far as like I said, my tequila buddy dropped out because, well, I was trying to get his son to trade, but he thought it was gambling. He says, I don't want my son to be a gambler. And I said, okay, all right. Better that he's a drug addict. See you later. So, they coming from a tequila guy, which, you know, he's a whole new level. He's the, as they would say, the baseline. He's the baseline for the indicator. So, yeah. So these guys get into this all these confirmation things and back testing here in the Discord. It's very fascinating reading, I must say. These guys got almost 120,000 people subscribed to the No Nonsense Forex. It's amazing. So, okay, I'm asking people to stop submitting EA-driven results for access into private group. Listen to this guy. Now listen how brutal. Like, dude, why can't we have a private room here on Discord? Can we swap photos of genitalia in another room here? I mean, this guy's name's Young Beef. Who's he talking to? I think it doesn't matter whether you count those or not. Just pick one and do it every time you test. And Indy, that means indicator, people. Just let you know, Indy doesn't mean Indy car racing. So you can still accurately compare the percent win. But percent win doesn't mean shit. It never did. This is another big fallacy. The percent win, dude, you could be 40% winning and just doing, like, making 100% a week. I mean, if I got a 3 pip stop and I got a 500 pip stop, it's a little different. If we're getting stopped out of those 4 pip stops. So here's the problem with percent win. I mean, like, you could say stuff like, well, you know that 500 pip stop, I put like that was 5 standard lots. I just kind of thought we'd just keep it like that. And then that 4 pip stop, I had crazy like 1K on that. But yeah, we finally got stopped out of that big trade. Oops. Or, you know, the win rate. Oh, man. Too funny. Too many people taking lead or something or Nate's work and trying. We got somebody who's plagiarizing here. Come on, people. What I tell you about, like, is this, you know, people troll. It's just too much. So since they're not letting, they want me to verify my phone numbers, so I'm just going to troll them. Oh. Too many people are taking lead. I like lead in Nate's work and trying to use it to pass off doing the work themselves. Oh, you know what? You can have all my shit. Jesus Christ. Yeah, you see how much time I put that moving average on there, and you're gonna go steal that 5-period moving average from. Dude, that's specially formulated. It's like this ass that's building these Dumble amplifiers. So I'm watching this guy's on YouTube. He's playing some vintage guitar from some douche guitarist, some famous idiot that didn't even want to be famous. Ended up doing drugs. He felt so bad about himself. And this Dumble amp that the guy was like, dude, don't copy my circuit. So he sent him out with the glue injected into the fucking thing, unserviceable. What a dick. All he did was daisy chain and put series on his potentiometer. So when you go to turn the amp on, it takes you forever to get something. It's like schizoid knobs. It takes forever to get it dialed in, but it's unique. And then people mark it and they're like, don't touch it. Okay, that's what Fibonacci is. Do you drop my fib tool and you bent it? All that work Nate put into there. Well, Nate, you should have kept that a secret here and not bring your stuff into the Discord channel. I think that's been a problem here. I remember when Forex Hangout had his, and I went in there and I cracked a joke about Ryan Brown being gay. But his wife, how could he have such a hot wife when he's gay or something? And they deleted that comment faster than I got stopped out of a 1-pip stop. So that didn't go well either. And then we were teasing me and this guy that does amounts of this. Me and Scarface were teasing this one guy, and that didn't go well either. People don't like to be teased. Firelight said, agreed. I hope these aren't their real people's names. I don't want to go to jail for divulging all these lunatics in here. That's another thing. Do not use your real name. But yeah, I'm getting a kick out of it. It's much better. It's a higher frequency of people than any Discord channel I can think of. And I actually was overwhelmed last night. I had to stop reading it. Hello, great work here. I appreciate. He sounds like he's not from the United States. Does anybody use neural network here? Yeah, like drinking wine. That's interesting. So I know that's supposed to be the cutting edge. I get it. Why do you need neural network? Oh, why do you need? We're getting all not. Why do you need some? No. Why do you need it? A neural network. Oh man, that's abrasive. We don't take kindly to that kind of. I feel a microaggression coming on there a little bit. Why? Because a neural network it's a network, dude. Networks are cool. How do you think we're on the internet? Duh. Fuck you, lad. I hope lad ain't edge. Let's see here. What we do here is what neurons do. Quite a bit like genetic algorithm 2. Raw data. Derivations of raw data. Settings. Better results in time. Wow. It's like poetry. Could you write a song with this as lyrics? Raw data. That's a great name for a band. Derivations may be a little bit not Me Too enough. Out of curiosity, not that I'm going to do it myself. Oh, I like that little bit of, what do they call that? The clause. The kind of asterisk. Out of curiosity, comma, right? Not that I'm going to do it myself. I thought he said do it to himself. But if we created our own EA to submit, is that allowed? When I have the time to do it, I'm going to use my EA to find good daily indies and manually backtest them, submitting those results. What are you, a masochist? Why in the fuck would you bother? Dude, just open a micro account and trade it flat out. Just trade the future like you don't know what the fuck's going to happen, because you don't. I don't know how these people do it, man. Every time I run an EA, I have to buy a fucking computer that needs like, I need a super fast computer, because when I watch an EA crunch, I'm like, is this thing done yet? Do we blow it up yet? Like, when's it gonna? When I see it's just starting to blow it up right off the bat, I just kill it. I'm like, that's fucking, what a retarded idea that was. It's the frequency of trading. You notice that the best strategy over traded, the spread will eat you up, and the slippage, whatever have you. And a lot of these things are back tested. People, are they serious? Like, don't they know the spread increases during the news? Are they turning these things off during news? How meticulously are they really back testing this shit? Yeah, dude, bring it. Bring your fucking algo. Dude, it's bring your algo night. We gotta have a little bit more. This is so white. This no nonsense guy is so white. We need to get a little hip hop. Do we need some hip hop wave traders here? Like, yo, where's Pip Society's gotta get into this league here. Master Pip, what up, Master Pip? Yeah, we need to have our own like not like blackface. I guess that's a. I don't understand why that's not good. I'd be like, dude, you're a bearish candle. You're supposed to be a bullish candle. What are you showing up like a bearish candle for? People are just so like, so yeah, it's very curious. Here's the judge. FPV. What's that? Okay. I have no problem with it. So, I have no problem with it. However, it's not conductive to the private group results. An EA that spits out an indicator at a 56% win rate is not going to be the same as an indicator that performs backtesting it manually the VP way. And see, I think this is the big problem, is the VP way. Dude, you got to find your own way. If you're 5'11 and the other guy's 5'11.2, you're different heights. Okay. So, although I personally love EAs, yeah, me too, kinda. You know, on the weekends, when I'm lonely, the EAs, like, if you love to see the market moving, and even if you just run the EA just to watch the data go, like, you don't even have to backtest, just watch a chart, and then speed it up and slow it down, speed it up and slow it down, and then start it over again, and just watch it and say, could I trade this? What would I do if the market exploded in my favor or against me? Is my take profit ratio sized to the price pulse of the drama that's going on right now? Is it realistic to say that I could get in here and get out there? Anywhere on that chart, go ahead and cherry pick it. By all means, cherry pick your trade and say, that's the setup, boom, boom. It's perfect until you take that to the guppy and you go, oh, well, I guess I'm going to need a 500 pip stop for that pattern. Yeah, you're going to need a 500 pip stop for that, because each instrument has its own price dynamic range, and the Australian dollar to the dollar is like dead, pip-wise. And it's cheap to trade, so you have to trade really big on that to make money. But you're just gonna not make a lot of money if you go from the guppy to that, right? With your gun set at the same caliber. So if you have a trigger that you pull a one click, that you typically, some people try a 10K one click at the market, they don't think anything of it. Of course, when I'm up $15 on 10K, I'm typically getting out because I know I can get right back in. I'm not going to think this is like, wow, dude, I better buy another 10K. I'm like, dude, if that's happening in Asia, I'm like, wow, that's pretty good. Okay. I'm never going to turn down money. So taking small profits because they're just there. This guy wrote me an email, and he's having a hard time. Well, I don't know what broker he's using, and I don't know how big he's trading, but to trade the demo and just imagine it's real money, and just okay, I don't know the time frame he's trading, but if you want to challenge if you think you're really good, you think you're really smart and all that, you're so smart. I'm so smart. Shut up. Listen here. Then to break out that 5-minute chart and demo trade it and just see if you feel comfortable imagining that's real money, or saying, wow, was that a lot of work? And god damn, I missed the fucking entry. What the fuck? I should have. So the difference between the market order and the pending order is the pending order says, I know where the market's going to go. Well, otherwise, right? So I guess that's why the guy was asking the percentage of fill, because if you manually place those, you're like, dude, I just spent all that time doing that. Yeah. So the same thing if you own a jewelry store. Who's buying your fucking jewelry unless it looks like the most amazing designs you've ever seen in your life? And you're like, this is amazing jewelry. Never seen anything like it in my life. But how many customers are you going to get? So you got to have like shit that's made up, and maybe you sell one piece. Okay. But in the trading game, I can understand manually clicking each ticket it would be tremendous. It would be daunting to put 100K above and 100K below staggered. Each has their own unique entry, own unique exit. No worse ratios from 10 to 1 to 1 to 2. No break-even bullshit. Everything's placed very carefully in deep vacuums. Maybe they're different sizes. Because who wants to fucking place a goddamn 10 single Ks when you could just put a 10K somewhere around there with just a wider stop? So that is the reason why nobody trades like that. And that's the reason why it's harder to get out of those trades. I once took a account at Traders Away very high with 1,000 to 1 leverage. I took this account from like 10 grand to like 80 grand in like 8 days. Okay. And then I just wouldn't get out. So it just blew up. It just melted down because I wouldn't get out, because to get out of all those 1Ks would take about 20 minutes. And I just thought, ugh, I'm up like 30K. I should get out right now. It spiked up where you're up like 15K, and screaming, and you could just say, close them all, but just fucking let it go. And I didn't run a trailing stop, so I didn't have any hedges or nothing. Like, even if I would have hedged into that, the hedge would have lightened up the long side of it. So the hedge is a compromise that nobody wants to do. Well, because they think it's illogical. Why would you buy and sell at the same time? What are you doing? Pick a direction. How are you going to make money from that? Well, if you tighten up your stops and you widen your take profits and you find unique entries and you don't overtrade it based on the size of your account, you would definitely be overtrading it, because when you're making money and that shit's moving in your direction, and it's the breakout trades are doing what breakout trades are supposed to do. They explode, they're cashing out, and if you see that it's reached the climax and you've got greedy targets in there, you should just take the whole position, go flat, come back with limits wide, and just walk away. Or you could put another light hedge on again, because you're starting over. Every time you start over, it's going to cost you money to some degree. Even if you get kicked out of a position because you put too tight a stop in, when you come back, you got to buy the spread and the commission all over again. So in a sense, there's this also a curve of, is it costing you too much? Are you putting in too tight a stop? You're trading something you can't afford. So if you can't put a 30 pip stop and an 80 pip stop and a 130 pip stop in, right? And you've got maybe a 80 pip stop to make 50 pips because you're probably going to make your 50 on that one ticket in that one position. So it's like once you make it okay to trade every fib, every round number, every for a certain period of time and a certain contour of a chart, if you compress the chart and look down it, so imagine you can look at the edge of your chart on the right edge and you're looking into price, the distant prices, or those holes on the way to the distant price, right? So you're looking at the cone of where you're at now, because behind you now in every chart on the planet right now is a history of price, where it's been. But it's where it hasn't been that it's attracted to. So the further it goes away from, if it goes up or down, right? It's cutting through, and it's printing. Well, some people say it's printing that price. It's painting that price, and it's making that price kind of old. I mean, it's like been there, done that. Okay, so then the price will retest an area on the chart, and it may just kind of like nick slightly lower or just fail to do it. And this is what no nonsense thinks. Well, the banks are manipulating there, and they're going to really catch you there. They're going to catch you. Okay, they are going to catch you if you're so stupid as to approach the market with one goddamn approach. You know, the fear of missing out's there for a reason. This is why you would trade at the market. Anybody that trades at the market, in a sense, has a fear of missing out. All market orders are really based on instant. They're based on, I know I'm in. Certainty is what they're based on. There's no certainty they're going to hit your stop, and they're going to, if you're looking for a stop entry to go with the trend, or a sell-off into your limit to get picked up at a deeper price in a pullback. There's no certainty in that. There's certainty that if you put a buy stop and a sell stop and bracket the market, that one of those will fill. Because the market cannot go sideways forever. I guarantee you. There are some things that are absolute certainties in trading. If you get into a 1K with $1,000 in the account with no stop, you could blow up the account one day and never touch the trade. I don't think people have the time, or they've done that experiment. Like, it's funny to have a robot that would do some wild trading like that. Just puts on 3K randomly and then just holds it. You know, it's either going to look like a great trade, or just maybe be sideways. It's up, it's down, it's up, it's down. It just really didn't make any money. Most of these robots are getting in and out in the market, so it's kind of funny to think, well, you can look back at the chart and say, what if I got in here? You could say stuff like that about the Canadian dollar to the dollar. Some amazing, 6,000 pip moves, in 3 years and stuff like that. 5 years. Crazy stuff, just like Bitcoin. This Bitcoin or the crypto side of things. Now, silver's going up. This palladium, I think the inflation is just coming in through the ground level of, just labor mines. You got GM on strike, so. Yeah, I don't think it's going to be hyperinflation. I think it's just going to be slow grind. I think people like it. They feel richer because now they can charge more. And I don't know, I always thought inflation was almost like a psychological kind of lubricant. People like the idea of, but us old people don't like it too much because we're like, dude, it used to be like 10 cents for that. What the fuck? But other stuff's so cheap. Computers are so cheap that, it's psychotic. I mean, digital storage is like it's science fiction, really. What you can store digitally, what you can store, I guess, all the books that you could have scanned and put in your pocket. Just I don't know, you could. It's crazy how much stuff you can get on something. And now we got the digital. We got the digital trading now, and people want to build a robot, and you can't blame them. Um, this Asian session is, to me, the holy grail is Asia because it's the time to. If you think you can choose the direction, you do it in Asia. Of course, the market may not be synced with your 20 EMA. So even the 4-hour chart with the 20 EMA is going to get it wrong. At some point, it's going to be left. The market's going to turn faster than 20 EMAs, and it's right. So the market's not bound to behave, and Trump's tweets should not be blowing up your account unless you're trading without stops, and it's totally possible to destroy. Like, just try trading the election, and I tried it with real money and fake money, and I'll tell you, I don't know, you had to have a very different kind of broker on that day. You had to have more than one broker because the price is like, between brokers is 100 pips different. So depending what broker you're on and which was going on there, that was just vicious. So, but yeah, I don't think it's the problem with the trading is it seems like you want to do something, and when the market's not going anywhere, people just say, "Well, I just don't. I'm not getting a signal. I'm not getting this." But to me, it's like, wow, this is like, what's going to happen next? I mean, this is the setup. So if you get in before the setup at the market with a wide stop, and you say, I think it's going up, it could pull back, then why not just buy one at the market and put one in a limit 10 pips deep? Right? There are people that won't do that because they're like, yeah, but oof, what about the limit? What do I do with the stop on that? And what do I do for the target? And now what? Should I put in another ticket? Like, oh, it's almost like a real job. Like, so it's like, yeah, the suspension on the car, should I put another, like, spring on maybe? Because we could hit a hard bump. The coilovers have that extra spring just in case. Of course, there's not much room on that excursion, but, you want to get that extra, like, hey, just in case. And, I think it's insulting to people's intelligence or ego to hedge the market because they're saying, I don't know, it could go either way. And so the more you study, the more you should be able to pick the direction. And for God's sake, you're in this Discord thing, learning all this stuff from all these people. They've got actual prop firm traders in here. They got pro prop firm traders in here. So just mind your P's and Q's in here. And Nate is one of them, just to let you know. Nate's so yeah, reading through this, this is not a good fit for the group as they cannot use your results to compare. Oh, well, I'm sorry. There's secret results in my private group anyways. How dare you? Having some Murgatroyd. Look, oh, Nate's typing. This just in. I'm trying to play catch up on this. What's the difference versus EAs and manually? My EA is based off manual work. Now, how's that even possible? An EA is so psychotic, dude. Besides, do these people really know? Are they getting a fixed pip spread on their fucking stuff? How would that not be a good fit? Well, your grammar needs a little tidying up, I think. Oh, wait. VP's chalk up rule. I have to Can we go to the chalk up rule video, please? Somebody get out the chalk up. Honey, I told you VP, dude. Honey, get the VP manual up. Look at that chalk up rule. The chalk up rule. He's not talking about that marching powder, is he? Let's see. What in the fuck is going on here? Okay, so weighted 60% win rate, including the chalk up rule. Hey, I like that. How about 62.8 or so? Okay, because that makes it really easy to get into the group. Dude, you're not getting into our group. You're not a VP'er, man. You're not VP material, dude. I can tell you've bent the rules and you're not paying attention to your ATR, 1% of your account. I mean, of the last known price crash. Hence, why it changed to all 5 charts and a minimum 100 trades. So as long as my results are based on the chalk up rule, I can use my own EA. Nah, man, you missed the point. I'll say. Boy, this judge, he nailed it. I really did miss the point since I'm totally confused, laughing my ass off. We want accurate results, but we don't want to spend hours verifying that you created the EA flawlessly and having to try to verify results. Bring that EA out here. Let me see. Bring that, honey, get the EA out. What's an EA? Oh, God, man. Can you imagine? And these people are typing this. Where do they find the time? I'm glad I didn't have to type all this stuff. Yeah, so I find 2 indicators using my EA to make sure it will qualify. Then manually backtest those 2 indicators again based off VP's rules, i.e., same manual backtest, to get the final results that I will submit. I'm only using the EA to find the indicators, not to backtest with them. God, what an idiot. I've been down with this exact route before. I remember the outcome. Just accept that is the rule. Well. Man, these guys, I mean, they are fucking EA Nazis. No EA, no chalk ups for you. He's not using the no-nonsense chalk-up rule. Aw. No offense, but you're an asshole. No offense, but it was the rule. Why does it seem some people were getting special treatment? Well, you know, hey, he's running for president, so personally, as long as I'm going to do the work and giving you the results, using the manual backtest, there shouldn't be an issue with it. It's the same shit as manual backtest. Put that in. I got an idea. Just come talk to me when you're ready to submit. Now get down. Get down and give me 20. Son, you in Forex boot camp. Don't you get it? Until then, I'll just stop talking about hypothetical work that hasn't been done yet. Rules change, time passes. So who knows what the future holds? Wow, he's like got an eyeball of like an eagle. Man, I wish they'd let me in this chat room. That's your opinion. It does not change the rules of this Discord server. Something you fail to grasp. Son, it's just above your head what's going on here. got to grasp it. What a tactile comment. The other thing about special treatment, oh, I like special treatment. That's a good name for a band, too. Entrance is completely discretionary. You can submit 10 years of back tests with exceptional quality. If we don't think you're a good fit for the group, that's there now. And then we don't have to admit you. God, is this like, can I be in the clubhouse kind of thing? What's going on here? Son, what you got to do is we have an initiation fee. We're going to take your balls and turn them into pips. We need you to be convinced that the work matches what you've already been done, so you're a good fit. Well, we like a good fit. I like them when they fit tight. He said good fit twice, so I guess you got to wear like tailored clothing to this event. That's the principle. Oh, well. Nate. Yeah, Judge is right. It's more considerate to the mods. Those are the moderators, the people like me trying to, decipher this. And also, back testing will yield better results than an EA could. That's probably true. Well, right? The EA is going to misinterpret it's not going to understand the special candle rule. It is true. It's not going to get the special candle rule. Especially since it's really easy to make mistakes with the results you get. Backtesting 2 indies manually isn't a very time-consuming process. Anyway, yeah, don't be a lazy cunt. It's enough with the EA. We're manual traders, damn it. Why do you think we got tendinitis? Okay, so that was the final comment there. Anyways, I thought that was pretty funny. Oh, yeah, that's some funny stuff, man. Love it. The baseline was my favorite chat, though. Hear people talk about that baseline like, dude, as long as she's under 3 bills, she's got a pulse, because, I don't want no hanky-panky going on in here. Here's baseline. Here we go. Wow, look at this. Now, this is just, you just want to get lost, man. Check this shit out. Oof. Baseline. And I'm not talking BASS line. This is yesterday. So, yeah, we got people. Don't steal Nate's shit. Whatever you do, don't be like putting this stuff in a package and selling it as yours. Anybody's welcome to sell my shit. I don't care. I don't give a fuck. That doesn't bother me. I wouldn't want to have to manage all that bullshit anyways. Wow, yeah, people are really, this is just goofing around here, not talking about that, but some people are really concerned about it, Oh, here's another one with a baseline concern. My 2 cents worth. You do not enter on only the baseline cross, but it's what you look for first. Okay, he's anticipating his indicator instead of letting it catch up. Then your confirmation indies must confirm plus volume. Ooh, the volume. Oh, God, I hate that. Dude, could you put another filter on that so I just lose my mind? You can never enter a trade. Oh, don't never say never. Damn, what a buzzkill this guy is. Conrad, I'm not smiling. What Conrad? Wow, it's more than 2 cents, dude. You're hitting us with like 500 pips here. You can never enter a trade in the baseline has not been crossed in the last 6 candles. Exclamation point. Doesn't matter what your other indies say. My other indies are screaming, buy this, you fucking idiot. God, these are some disciplined traders. I don't think I'm going to fit in good with this group. Including continuation trades. Oh, no, not that. You mean the makeup sex? That's the best part of the relationship. We get back in the trend. Oh, my God. He took a clip out of the fucking... Am I in a Scientology? Go back to OT3. You fucked up OT4. What the fuck? Main rule of entry and exit. Oh. Enter when the price crosses over and crosses beyond your baseline. Go chase that price, son. Nah, get your ass out there and chase that price. We don't trade no reversals here. Don't forget, NFF strictly prohibits reversal trading. The lowest risk trading on the planet. We don't like those. What are you, a stop hunter or something? I can't trust this guy. The rest of your algorithm must allow it. God damn it. My algo's not allowing me. Man, this is like, it's like Seventh-day Adventist. Who are the people that don't celebrate birthdays and shit? These people knocking on your door, putting flowers in your AK-47. For continuation entries, also baseline should agree. We gotta agree. We got an agreement. Should we get in? I don't know. I'm kind of like already in a trade. Should I get out of the trade? Now here's a big conundrum. Even after you figured all that out with no nonsense. Another rule, don't forget. I've seen half of his material, so I can speak. Don't get in currencies that are the same fucking currency. You can't be long Australian dollar and be long dollar CAD. I mean Australia CAD. Pick one, buddy. Oh God, I missed the other entry. Should I just... Can I wait till my indicators catch up? Sure you can, son. Just... Can I change the settings so they force them to set up faster? Like... I want to be in the group that's like adjusting the indicators because I'm impatient. Can we put the settings on like 2? How about 1? How about we just take closing prices? Oh, God forbid he's using the actual raw data. Don't you know around here we be using the moving averages? You've heard of these. Surely you've heard of the shifted ones, the Ikamushu Cloud. I like the Ikamushu Cloud because it's like taking a fucking Tai Chi class. We're gonna do Long Su now. So I don't know, man. This shit just it's fucking it's funny. You gotta love this shit. It's very entertaining. Dow yen's crawling out of the hole. I'm very long Dow yen here. I bought more. I don't know what to tell you. I bought more. We went down another 30 pips, and I bought the ranch down here. So we'll see. The weekly looks very good on dollar yen. I wish these guys would talk about trades in here. Okay, so for continuations, also baseline should agree. Check. His name's Mode. How'd you like to go on a date with Mode? That's not a geeky name. What up, Mode? Hey, like, Pip Society wants you to, like, Master Pip's coming out tonight to the club. He's going to be, like, double clicking at the bar. Yeah, I'd like, next time I go to the exotic dance bar, I'll bring my tablet with me and be double clicking. I'm investing your tip. I'm investing the dancers' money for her. Oh, the old righteous okay sign. Wait a minute. I thought the bridge too far was in regards to the CI hasn't crossed the 7 candles when the price... No, he's trolling him now, right? I heard it was 6 candles because this... We're not going to count. Candle 1 is 0, right? Oh, 7 candle rule. Crosses the baseline, then don't take the trade. Because, not taking trades are saving so much money. I like, ever since we got that paint on the windshield, I don't even see the people we're running over. Thanks for putting the blinds down. Thanks for covering my eyes. While I drive drunk, I didn't even know I was cross-eyed. Are these people kidding? Not that the this baseline stuff. Don't take the trade. Not the baseline has crossed in this. Oh, 6. I mean, see what I tell you. We have 6. We have like 5, 6, 7, 8, maybe 8 candles. Thanks for giving me a little breathing room there, buddy. 6 or 8 candles. Give or take. Yeah, you're right. R.J. Reynolds agrees with that. Wait a minute. No, wait 30 minutes. I'm on the 30-minute chart. Okay, the weekly looks sweet as hell on Dalrymple right now. I'm just telling everybody. We pulled back for 1 week, and we didn't pull back for I'm running very tight stops. I'm at hog long Dalrymple. It's 9:30. It's 9:40 Eastern Standard Time. I just used that as a reference to the number of candles. Conrad's very calm. I just used that as a reference to the number of candles, not specifically in regard to 7 candle rule. Just remember, you work backwards on the 7 candle rule. When the price crosses your baseline and your C1 has already crossed, it must not be more than 7 candles previous to this one. Oh, fuck. Man, how do these guys do it? I feel like I'm in some kind of cooking class, and today class we're gonna make cookies. Now they're gonna be star cookies. Dude, I'm gonna make any kind of cookie I want. Can't I make little baby cookies and a couple big ones? No, we have rules here. The group that you're in has very specific rules. Yeah, but you said when your C1 crosses, you go back 7 candles to see if the baseline is already crossed, which is the opposite. Yes, but I say you can never enter a trade. So I refer to the baseline crosses in that sense because it comes first. And remember, the C1 has crossed more than 7 candles ago. A bridge too far. Wow. Price must cross and close past your baseline. Now this is the Bible. He's quoting the Bible for the no-nonsense religion. Whew. Everything else lines up for a trade, but your confirmation indicator crossed long 7+ candles ago. Thanks for the clarification. Thanks, my son, for the clarification. Okay, all I'm saying is the statement you wrote, you can never enter a trade in the baseline, has not been crossed. It is the last 6 candles. Doesn't matter what your other indies say, excluding continuation trades. Is false, but you seem to agree with me, which is confusing. LOL. Okay, you are right. Whew, finally. I should have mentioned any number, but I was referring specifically to the baseline cross. Wow. These guys really know their shit. Here comes the vintage. TJ Vintage. Yo, what up, TJ? TJ Vintage in the house. I think it's the hardest indicator to get right. So far, all the ones I have tried variants seem to give me good signals. Where they cross, but miss a bunch of good trades along the way. Now that is my point exactly. Here is a woke NNFer. This motherfucker. He knows what he's talking about. Yeah, that's right. You're missing some killer fucking trades. I want a great success rate, but I don't want to skip a lot of good trades. That's right, brother. Back to the drawing board. Oh, can we imagine what Conrad's going to say about that? You're over trading. Let me see what. Oh, there's nothing to be said there. Oh, I guess he just made that comment. This is real time. I'm watching this. Let me go to another topic. Oh, my favorite one: confirmation indicators. Aren't exit indicators really entrance indicators, though? Wow. Very well said. Just my input. Glad you agree. What did he say that was so well said? Oof. Your volume preventing you from choppiness and ranging markets. Your C1 should pick the most every signal out there. Yeah, so you have a fast and a slow. You have a sensitive indicator and a less sensitive indicator. Yeah. I know. Been there, done that. Just doesn't do as good as your gut feeling and having money in the account. Anyways, it's very entertaining. So let me go to my latest endeavor is this trade I'm in. I'm in the dollar yen currently. And I guess I went pretty hog long here. So I'm at about $588 a margin. And I'm just riding it out here. I guess this is about almost 2 standard lots here. I got out of that euro dollar on the last time. Now we could have got filled on a breakout here. Now on the euro dollar, since from here to here is let me just mark the chart up here. I'm gonna chalk up the chart. The oh shit. Here we go. Here we go. They're playing this fucking song on the radio. Here we go. Some guys on a bullhorn. Okay, so this is the classic trend line that No Nonsense probably was aware of. Also, it's a volatility line, but this is the line on close. Here's the triangle, and you see the trap up there last week, where we could have got in this 25 pip window. We could have accumulated a short position, or we could have just kept taking those 20 pips, 25 pips, 30 pips off the table, just back and forth, back and forth. Maybe leaving something lingering, long or short. Now you got to manage that trade. So how do you manage all these tickets? Well, almost everything in here is, if it's a buy at the market, it's just buying a 1K. So for me to double click something here is pretty easy. I would like to start buying down here, so I could just double click, find something that's about yay deep. All the way down here, I'm going to buy this whole week. So if this can go like this, and Europe opens and they plunge down, I suspect my exit would be here. So I already know the setup. If I buy below here, I got to get out here or slightly above, if that's going to be my first ticket. If I lay a grid in like this, okay, and so you don't have to back test this. This is a real world scenario in the future, and the deeper the ticket is, the longer it lasts. So you're expecting the rate of change to be X. If that's a 4-hour chart and you're going to drop, or it's a 4-hour chart and you're going to drop 4-hour, 8-hour, 12-hour, all day, all week long, you've got pendings out here. Or you're going to every day drop an array out in front like this. It looks like they're gonna break it down here. Or I'm gonna buy these basements. This vacuum, so as you're looking back and you're looking at the chart in this direction, you see this shelf up here. Okay, there's this very steep, this is really, the market does see this. It doesn't see this anymore. This vacuum's filled, so all it can see is this. This vacuum doesn't exist anymore for the market. All that exists now, this, and it looks kind of kooky, and I don't know if you can get an indicator to do this, but your indicator would have to look like this. Okay, because this doesn't matter anymore. That's been filled. That game's been played. That hand's been played. The people that bought there got the fuck out there. And the people that bought all the way down below here today, right? They didn't make a lot of pips, but that's your classic high probability retracement. It could have kept tanking. And you could have had tickets down here that you hand placed that never got filled. And then you'd feel like you're really wasting energy and time. But when you consider that a broker's going to let you trade at 1,001 leverage, say, so you only need like $3 in your account to hold a position of $1,000. That's pretty insane, right? So also you have this bottom become a top here. You had those people, the people that bought this wick and dumped are the same people that do that trade plan. So if you can see that trade plan, I don't know. I see this as, why is this baffling to people? I don't get it. This is a lonely wick, I call this, or you could call this the bottom of your Gartley, maybe. I don't know. My Gartleys go inside. Yes, the people that got in here in a non-directional trade are winners until this point. If they run a trailing stop, they got stopped out, and they're like, look at that, I back tested that, it makes money. Great. Now you got to run 20 versions of that and run them on different time frames, and or run them on the 4-hour charts, but you're going to have the 5-pip winner in there to pay for the rack if something goes wrong, or pay for, not Iraq, the rack of tickets. Nothing could pay for that. This top here, this stop hunt, so to speak, here, where they nick that, they trap the bulls. You could say they're trapping the bulls. You could also say that this is such a bullish move in itself right here that it just ran out of gas. It's funny how people spin these patterns as to how they got burned and how they suspect. It's funny that people pick out if they claim the bakes are making the prices, they're manipulating the market to like fuck with people's heads. That just because you got all giddy about going short here doesn't mean that somebody got giddy about going long there, okay? Because you're late to the party doesn't mean somebody's going, hey, you just got divorced from her, I think she's hot. God, I'll take your and this is actually a classic where it's down 4 hours, and 4 hours it engulfs. And if you like to trade the engulf, you want to be the engulf. So this area here and this whole thing is all the cause for the market reversing as it dips into this window is the depth of that window and how that goes back. And if you're expecting it to fill down here, you didn't. You didn't lose any money. That is a no-nonsense creed. You didn't lose any money. You placed a pending. Now, I don't think these guys, I'm going to guarantee you that the no-nonsense crowd is trading up against the wall. In other words, this is the wall, current price. It's coming at them. They look down their indicators. It changes color or something. Okay, signal. Do we have crossover? Count 6 candles back. Do we have a setup? Blah, 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 blah. They're not saying stuff like, well, do you think there's any sellers up here in this 20, in this steep thing here? Do you think there's any sellers up there? See, that's ICT thinking, right? Think there's any sellers up here? Like, do you think that this shape is not like the biggest fucking deal? Because we know if they come up here, there's sellers galore. There's sellers above this. It's what does it do here? Does it go sideways? If it's going sideways, you got to have a hedge on. So if you get trapped in a short retracement off the top, you're selling. Well, aren't you selling if you're going to get in a hedge here? Your cash out's your profit. You're selling to get the fuck out. That's how you're making money. You're getting rid of your longs. The idea that there's supply and demand, dude, it's order imbalance is the problem. When we go into this is unfair value. This is order imbalance. This is balance. When you're in a doji, everybody agrees. Yeah, that's a good price. They agree for 12 fucking hours. That's a good price. And all of a sudden, guess what? No. People are like, no, I don't like the price. Notice the triangle here. Oh, I'm sorry, we shouldn't be looking at the euro dollars manipulated. Oh God, where's this guy come up with this shit? Man, what a head. How does that guy get through his life? What a way to think about it. So look at the triangle here. Look at the lack of volatility. I'm just going to point it out as a triangle, so to speak, just like this one. This lack of volatility situation gets very quiet. Here too, lack of volatility. This lack of volatility is your signal. As you drift up in here, if you want to be a confirmation ticket, instead of using indicators for confirmation, use your tickets for confirmation. Here you're short right now, right? You're short because it's breaking down out of a narrow range. You got to stop here. You're only risking this much. It could keep tanking and you would trail your stop. Now, if you do that on one ticket and you have good risk management and you run one ticket like that, you're not a high frequency. You're not really trading that much. So I get the feeling that the people that are in the no nonsense are people that are just casual traders. They're just saying, oh, you know what? It's okay. You know, if we just get in there next week, I mean, we wait for the indicators to catch up. I mean, well, of course, you're waiting for maybe it to pull back one more time because it's always zigging and zagging. There's always a chance to get in a better price. I mean, and even if you are chasing it, when it's quiet, it's the market's telling you can run tight stops. The market's telling you how tight a stop to run every 4 hours. When the market hasn't gone anywhere, it says, come on, you can run tight stops. Come on, let's go for a ride. It's either going up or down. If you pay the insurance policy and do a non-directional trade, it costs you a little bit more, but sometimes it pays off because you will not get, if it's a confirmation stop entry, you will not get filled on the other leg. If it's an at-the-market hedge, yes, you are saying, I want the better price, I want to lock it in, or you could build a hedge. How do you build a hedge? It drifts up, you put in sell stops. It drifts down. And when I say drift, I mean you're in wave 4. You're in wave 2. You are in no man's land. You're just drifting, turtle soup, whatever the fuck you want to call it. It drifts down, you put a buy stop. It drifts up, you put a sell stop. If you can build a winning hedge and you're locked in, you're in some kind of profits, and then the market does make a move. That's an amazing setup. So I'm sure this guy that plays poker, it's probably like when the cards set up in a certain way, or in chess, you you just see, oh, if I do this, it's a cascade effect. It's going to unravel that. It's a classic. I'm sure in cards, it's shitty hands all the time. If I was playing cards, if it was shitty, if I had the more shitty hands in a row, the more I'm going to bet higher and higher the next hand. Because we can't have shitty hands forever. We can't go sideways forever. We can't go doji forever. So when you go to Vegas, you're watching it. You're saying this is just garbage. It's noise. And every noise session that goes, you build during noise. When the market explodes, in my opinion, I'm not chasing it. I don't want to be the guy that's selling, or I don't want to be buying on this big price pulse here where it goes screaming up. Even though I could say, well, you know what? I wrote a few pips out of that to the round number, and I feel good about that, and I made 25 pips or 30 pips, and wow, look at me. But what if I think, oh, they're breaking out? Look, they just took out the high of the fucking week. This thing's going to just keep going. When we take out when the market goes berserk, yeah, I don't think a lot of people are going to be able to trade this. If they're used to trading 50K in their hand, triggered at the market, scalping, and then you say, well, how would you feel about putting like 3Ks in every handle there? They'd be like, I don't know about that. Right, so not everybody's going to be able to do that, but you should try it just in case you, this trading right up against the signal that's coming at you is an at-the-market scenario, right? You're saying, I see the signal, now pull the trigger. Counted 7 candles back, let's get in. Or you may actually put a buy stop and say, I'm going to confirm entry, and that'll be double confirmation. By then, you're not really a professional trader. You're true retail. Last guy, and when I say retail, I mean you're the last guy to get in because you feel safe about the product, right? The first guys to buy the computer with the bugs in them. So people that are doing Linux are going, it's okay, I can fix it. People that want to drive a car that's off the dealership, they want to buy a car they ordered, with all the stuff they want, they're paying top dollar. The spread's bad, right? So that's what I perceive from people are making fun of retail traders. Like, oh, you think you're going to be in the race car business? You're not buying wholesale engines and stripping them down every night? Well, not everybody is, apparently, because 120 people on this no nonsense. I think the podcast too, because either Apple or something, there's like this podcast world, and that's how people are driving their car. They're listening to somebody talk about the market, and it sounds really. I guess people feel betrayed by the indicators or the stuff people said about him. Of course, I don't know. He's got some special indicators, which I don't know anything better than raw data. But only because I've looked at the charts and I said, how could I, if I could actually tell, if I cherry picked every trade and I can already tell what's the left side of this chart says, how would you have traded that? Where would you get in? If somebody can tell me, call off every trade, and you're allowed to cherry pick and allowed to totally say, when people say, hindsight's 20/20, I'm going to give you that all day long. Tell me how to trade this thing. What trade plans work and what kind of, I won't say price pattern, but price behavior per bar. And you can see here on the, I got this just before, I think it was scratch this over a little bit because I'm missing the, oh shit, I can't move that. Anyways, down here. I want to see just the left of that, see what's involved in that thing. But just before this launches off here, this thing here, this is about 8 hours of nothing. And you have a choice there. We're either going to plunge down, again, we're just going to range. So there's only a few things the market can do. I don't think it's that complicated, As you look back on the chart, like I said, Give yourself a break. Don't run all these rules. I just don't know how it's working. I just don't like. Doesn't it seem just hysterical to think about people counting 7 candles back and denying themselves money because of 7 fucking candles? 6 or 7 candles. I just think the most daring thing to do, apparently daring thing, is to say, wow, look at this thing, it's not going anywhere. Huh. Or here, it's not. Now here what's drifting up, and we can even see that the money management bots are running a trailing stop, and then they get trapped. When they get trapped, if you're running trailing buy limits, that's your first place to get in. Plus, if it's down in an uptrend, you bought. This was not down in an uptrend. So in the simplest rules, I think no nonsense people could understand my rule system is so stupid. You're allowed to buy if it went up 2 bars. It doesn't have to be 7 bars up. It goes up. If it's down, it's okay to buy. If it's down, it's okay to buy. If it's down, it's okay to buy. Down, down. Okay, all of these trades, this one becomes a winner quickly, and these become winners, right? If it's up, it's okay to sell, but it's contextual. And if it's really down big, you're going to buy with a really wide stop after 4 hours. You can buy one at the market, even if you got filled here, even if I got filled here on my limits that already predefined this entry, just like this entry was predefined. So I'm buying this. Now, how big do you buy that? I say make this the 1K, this is the 2K, the 3K. The deeper it goes, the more you buy. Right? And then you maybe have a master stop that's 100 pips down. Because you want this, maybe you get out on everything at the floor here and you treat this as a scalp. You want to buy more down here. So it goes against everything that everybody's saying, because they're saying, well, you can't do that because, holy shit, you're adding to a loser. But not if you're building a position, you're not, because that's the whole point. You're buying the good franchises, the bad. You're buying all of them because you don't know where the crowd's going to end up. What if there's a flood and everybody goes to the other store that you have? I don't see why people want to build these fragile systems. It's more robust to have a dynamic trade plan where you can see here's Sunday night here. So Sunday night, this thing breaks out. The breakout traders are like, woohoo, we just made 25 pips, 30 pips. There's no breakout. For people that trade small bar breakout, which is the only way to really trade it, there's no trades to like here. There's a little trade there, and then it kind of gets tradable here. And I'm not going to look at volume at the bottom. Oh, I need volume or I'm not going to get in here. Is any volume on this trade? And then this is just to wrap it up here. I want to say that there's no more satisfying feeling. It's a different kind of satisfaction than pulling the triggers. That you have a buy limit here, and you have a buy limit here, and you just bought. That's a 1K and a 2K, and you got to stop way down off the chart here, or maybe the stop's right there. You just nailed it. But imagine you've got another buy limit here and one here, and then maybe some that didn't fill. So you're in a 4K. But to be able to take, say, that bottom ticket off, or in America, you first in, first out, you take this ticket off and you bank into this bottom. And you're like, oh, great. Now, in the States, you can pluck these off. This is the last one, but this is the biggest ticket. And you would make more money first in, first out. So the sequencing, it's too bad that you have to think about this if you live in the United States. But if you place a buy limit here, and I'm assuming first in might be first pending you placed. I think it's first fill. You fill this one, and you fill this one. You got to get out of this one with profits or a stop, and this is where you'd have to put this stop. If it's a soft stop, it has to be first in the rack. The stop for this ticket needs to be below that. Right, you got to get out of this one before they'll let you out of this one. And maybe it's on the profit side. I have not studied it, but because I don't trade there. But if you had to do it, you'd have to test it. See, you couldn't back test it. You have to just do it. Because this ticket has to get stopped out if you're going to do a big, soft, deep stop, which is like a hard stop if they're very close together. But you definitely that has to be your scalp if it does retrace. Because if you get filled on this guy and it comes to here and you're like, oh, it's going to tank, you can't get out of this ticket. So that's why I say you may have to, unfortunately, not be able to, you might have to have a stop on this ticket. There's a stop here. So now you're out. Then you get filled on this ticket. That means you have to put in a raise like this. That really, you're going to just, you can't really build a big, giant position, like that. But yeah, that's. I mean, it's difficult because you have to envision. You definitely want. I'm going to buy down here. This is how it is. And sell above this heavier than I sell above that. But if I sell above here, if I sell in this window here, 8 hours, 12 hours, all day long, all next week. Who's not selling up here for a nice pullback of 20 pips at least, You should get a 20 pip bounce. You get in these territories like this one. If you started to buy this, and each one of these is unique, that's another problem, is that if you start buying here, right, all the way down, this eventually becomes almost like a winner. This one's like kind of a winner. But the whole array down, and you cash out, and then it happens again. You could just, that's why if you just trade from the long side, it really doesn't matter. You could trade breakout or from the short or long side. Hopefully, you did get in the breakout here. In combination, you're buying all the way down. But like I said, you're getting out. If you're short, your buying is cashing out. And that's why the market is going the other way, because, and I know that people, it could be said that the round number doesn't matter, but it does hit that round number. It does tag it, The 20, you could say there's support at 25 pips or support at 50. Yeah, I mean, markets are stretched, and really it's hard to, if you watch the ticker, you'll see, man, it's having a hard time getting to 50, 48, it's banging on 50, it's banging on. If you're just watching it, I used to just stare at the numbers at night thinking, God, that thing's almost at 50. It just can't get 50. And then it takes off like a rocket, So here in Asia, we're here coming into last night's session here, breakdown. Now we're in a new Asian session. So also, why I don't like to trade directionally on breakouts is that I'm too bullish, and I think that I'm missing a lot of good shorts. Like the guy said, he's missing good trades, because if I just put a sell stop and a buy stop here, maybe it is going to go up. I keep stacking them up. You can't see it here, but it would be slightly different. I'm never going to put a buy stop here and a sell stop here. So you also could, right now, you're putting in the buy stops. Right? If you're going to build into this, buy stops now. If it goes up, put in sell stops. and you're locking in a profit. So if you close all open positions fast enough before the market moves, you will be, if you're up on that trade, you'll be up and you're up and out. So there's a lot of different ways to approach it, and some people wouldn't have a problem with saying, well, it's drifting down, I want to put buy stops, it's drifting up with sell stops. And when it unravels, and of course, maybe you have 10, you have to have very tight stops on these entries. So on here, you have maybe a 8, 9, 10, all the way to 15 pip stop. I wouldn't go too much past 15 unless you're looking to make 80 pips. So you have a 20 pip stop to make 80. So you have to calibrate that. So it makes sense, because on this chart here, there is a 120 pip move in 4 hours here, but there is no hedge entry at the bottom of this. So you can't take advantage of every price pulse on one strategy because the breakout traders never get in here. These are reversal traders or market traders that are saying it's down heavy, I'm buying. Also, there are people that believe this is support. I mean, the winners that believe that was support, not that it was. The fact that they chose that price as support seemed to work out, let's just say. People would say, well, there was support here and it failed, so support doesn't work. And people would say that, but I'm also buying that also. I think all this deserves buying. It really does. This whole zone. So the zone's bigger. It's a pricier zone, but the payoff's bigger. You have to think about the payoff. And, of course, this sell on this, there's this wedge here again. This is a real deep, solid, and this is also the launching point of the plunge. So when it gets above there and pokes up in there, if you have your sell limits in this hole, actually, if you had your sell limits starting here, you can claim that trade made a lot of money. In other words, on the other side of this, since there's no bull and bear markets in Forex, that if you're going to sell, all your sell limits are here. But when it gets to the tippy top here, these are the bigger tickets. These tickets are moderately big. And maybe these tickets aren't that big. But for God's sakes, let's hope that you are long on something down here at this obvious double bottom, this zigzag. Plus, look at that last. Now, this is worth it. On the 4-hour chart here, is like 12 hours of pounding down here. It's definitely worth it to bite the bullet. And these are not easy trades if you are a trend trader, because you're saying, oh, I'm in a downtrend and I'm making so much money it's going down here. Who would buy down here, right? And the saddest thing of all is that if you miss that entry, the market comes back and you get a second chance, and you never get a second chance in life. Not like that. So actually, this is better than real life because you get a second chance and maybe a third chance and a fourth chance. Look at this. Look at these 4 chances to sell in a 12 pip window, and you fucking missed every one because you're waiting for your stupid ATR and your whatever. Of course, I'm cheating. I'm on a 4-hour chart. I don't know if that really helps anybody, but you have to really, if you are losing money, then it's okay to trade the demo and just save your money. And really convince yourself that, you don't have to know where the market's going to make money. Which goes against everything. Because if you're trying to learn something, who's saying, well, why'd you go to school then? If you're just trying to you're just going to ignore all that shit you learned and just say, well, I'm just going to, doesn't make sense, right? It's too contradictory here. Look at this British pound getting ready to pop. Of course, the 30-minute chart, a little distorting it, but look at this thing, man. Come on. Look at this thing. We're getting ready to rock here. Now this could I put a hedge on here, no problem right now. Because because this is so quiet, it's either going up or down. And I would pay for I would overpay for it because on the 1 hour you're like, you know what, I think it's a buy, but I could be wrong. And the beauty of the hedge is, I'm going to put the hedge on right now. I'm just going to put all versions of this. So here's a 12-hour hedge. Here is a 2-hour. These aren't the best ratios, but they're better than most. 6 to make 16. It's Asia, so they're not taking my tickets very quickly here. I have to wait for them to come in. 2 hours, 6 hours, 6 hours, 6 hours, 8 hours. So 8 hours is more aggressive. 12 hours is definitely. This is my biggest winning. This is 16 pips, risking 16 to make 42. I 10 to make 32. That's not bad either. These are the scalps, but I have these in here to pay the rent of the whole thing here. But these are confirmation leg stop entry. So it's pure confirmation, non-directional. Let the market be the decider here, and that's how that runs. Now that's not going to make a mint. It'll make a little bit of money. It's got a good probability of outcome. It's an unbiased trade, which is a big advantage. It does look like it's trapped under the floor here, and it's due for a rebound. It really does. I mean, this looks like, wow, this is the threshold. This is the line of scrimmage here. Man, I hate that red. It's just annoying as hell. So this is the line of scrimmage right here. British pound doesn't have the smoothest behavior. It's pretty brutal. Spread here at 1 pip plus commission, so kind of pricey. Asia always is, but yes, you can't hardly see the spread here. So my entry even looks good on this one. My entries are like 2 to 3 pips away from current. So how could this go wrong? Well, if you came in and you just started launching the same trade plan, the non-directional thing, it'd be better if you, now this is the 15-minute chart, which is not good for breakout trading. So you're going to have to go to the, I would say the 1 hour chart is about as thin as you could slice it. So as it's drifting down on the 1 hour, you could be putting the buy stops in. It's drifting up, you put the sell stops in. So what if you did that? Well, here you got filled on the sell side, here you got filled long. You know, whereas if you put buy stops here, are you waiting for small bars to do it, really? So small bars, you got buy stops. Here you got trapped short as it's going up. But when it goes down, you put a buy stop in. We know there's sellers above here. We'll be cashing out into that. So I've got to take profits there already. If I at least wait a half hour between each time I do this too, this is going to cut down the exposure. If I hit these 2 hour scripts every hour and only hit these 12-hour scripts and 8-hour scripts when the market's really dead in a very tight range on the 4-hour chart. So the 4-hour chart is very easy to trade from a breakout standpoint because the 1 hour makes you want to say, I don't know, I think I see a pattern, and what about this? And like there's a doji here. Yeah, you could have put that would have been the place to put it on. To double click at the end of the hour, right here, put the hedge on. Buy stop, sell stop. because it's quiet, and you could be slightly up there, or maybe you're cashed out of something here and you took 6 pips or 8 pips off the table and then it came back. That's why in 2 hours, if these trailing stops disappear every 2 hours, you won't be trapped in this short, but the 12-hour would be, right? But that's the price you're paying for the non-directional. So if we stop here, what if we go down? We start taking out all this stuff. You'll be up on those shorts. And if it tanks in the next hour, it will not trigger these longs. So you're not going to make it any worse than it is, so to speak. Also below here, your limits can start to come in. So you can, if you have dual trade plans, you can trade volatility and you can trade lack of volatility. The calm before the storm, because when the storm's here, I just don't think that, you know, if you're chasing it, you've got to buy more to make up for the part you missed, and then you got to run more risk if you're going to run the same size stop. So you can't get away from the fact that you have to make a decision when the market is undecided. Your time to make a decision was during this 4-hour spinning top or here. So this decision became kind of a bearish winner. This one became the big winner. I think what these people at No Nonsense are trying to say is, well, God, if I could just write an algo that had a moving average that was like this, and my rule let me sell here. And why can't you just put a buy stop here and a sell stop here? What is so hard about that? Small candle, buy stop, sell stop. Well, because, you know, I didn't back test it. Here, right now, you haven't really got filled yet, but here I've got tons of buy stops, tons of sell stops. If I'm trading this British pound, I'm probably very long, slightly short. Because, man, if they come after this, it's going to be, wow. And if they come down here, look out. We're just going to go through the floor. So look left, vacuums leave clues. The structure is really not as important as the abyss. Because the reaction at the abyss, now, if this starts to tank, it's got a whole lot of tanking to do. There's pent-up abyss. This whole issue here, if it goes after that, and it doesn't have to take it all out, it's not going to be like necessarily like boom. But come to here, dip into this window, a lot of buyers in here, come back, scalpers get out. Maybe it does continue, but what if it does this? Tops become bottoms, and it goes down that way, right? That's a daily chart. You would be the kind of person that would hold that trade probably till we got to here. If you were short, you know there's so many buyers here. You almost have to get out here. But we could get in there long. I'm a buyer all the way to this and beyond. So if I was going to do this currency, I'd start off with every 25 pips for like a 10K, whatever. I'd be like, okay. So we don't fill. I got here's my 12-hour. Okay, so if I'm just going to bail on this for 12 hours, go to sleep, and then not even have to think about this for until 10 in the morning tomorrow. So until 10 in the morning, this trade stands. It's going to get in. Okay, I got a really thick version of that on the tablet where it gets in about another 8K. So this is a hard stop. Buys every 25 pips with a 100 pip stop. 25, 50, 75. If the market drops another 25 pips in an hour, I put this in again. Then I got 6K sitting there. Then I have this one, very aggressive, 15 pips to 35 with a 50 pip hard stop. And I'm not going to click this one because it's going to buy 6 pips deep for 8 hours. I guarantee you it's going to drop at least 6 pips in 8 hours. I could see this taking a dive of like 10 pips in 8 hours. So combining this with the hedge, I'm saying that I'm more bullish now. If we go on a stop hunt, I want to buy the plunge if we go after those lows. But on the way there, I'll pick up the shorts, kind of soften the blow. Now I'm in a mixed bag. So that's a little difficult if you're trading more than one currency this way because you can't tell why you're winning. If you look at the equity, you're like, God, I'm doing pretty good. One of my breakouts must be working. So there's a problem because unless you have multiple screens and you can keep track of like, how am I winning and losing here? Should I get out of that? What time of the day is it? Because if your target's being hit as London opens, maybe you want to get out. But if your target hasn't been hit, the market's really not moving yet, then it's, but if all of a sudden Dow Jones open, they're hitting your targets, maybe you're like, wow, this is perfect timing because when the volatility kicks up, it's a two-way street. It could go up and down. And it could just be a giant pin bar at the end of the day or the end of 4 hours. And then it comes in handy that you took something, you compromised, and you got out of some kind of position. Reduce your exposure, you bank some pips, you pad the account. Now you can afford to do a outlandish, a different kind of trade. So that's what it's about, is being flexible, Having so many approaches going simultaneously. I'm not system jumping. I'm diversification in trading. So I have one system, and that's to make money. It's either going to be the market's sideways, and I think it's going to go up or down, or it's going sideways, and I'm going to pay for not knowing. I pay a little premium for not knowing by just putting a hedge on. And then I could also do the same thing in the limit world. I could put sell limits above, buy limits below, and say, I don't know if it's going to spike up or down, but if it spikes up or down, I can see where it'd be good to get in. I don't think it's going to ever be where that it's always a clean breakout or it's always a retracement, and it always works out perfectly. And so it comes to a point where, if you don't have a bear trap ready to kill a bear, you're going to have to get your gun out. Like, you have your gun with you. You can always pull the trigger and buy at the market or sell at the market, but you always have the trap, because while you're sleeping, or if you don't want to babysit that area with your gun, let the traps do what they do. The only problem there is that you don't know if all the traps fill, are you going to be able to get that meat out of there without getting a ticket? I guess if you leave some, you're not supposed to kill things you're not going to take. So there's always, in the mental consideration that you have this lingering ticket out there. I wonder if it filled, or when are they going to fill it? What's going on here? But that's going to be taking up energy. It's a burden to think about pending tickets. or are they going to stop me in, or what's going to happen here? So to numb that a little bit, you'd still trade the demo. So if I'm trading real money, I'm always trading the demo because I'm always running that the next thing I'm not good at, the next thing I feel uncomfortable doing. So hedging is very uncomfortable because you're saying, I have no clue. You're not saying I have no clue, but you're saying, you know what, I'm not sure, just to be on the safe side, and I don't like to ever be on the safe side. I just like a kind of like a risk. I say risky jokes. I mean, it's not always good because people sometimes don't think sarcasm's funny, and so it can be a little bit. But then, of course, I don't care. I guess um, it's just the risk you take to have fun. Sometimes it's funny. Sometimes people are just like uncomfortable. But what are you going to do? You just can't. When Mark Douglas says that people demand expression, so if you're going to do something, that's why if you're going to trade and you're over trading, it's better to pick up a crayon and start, drawing or something, and do something that's tactile, or just draw a picture of the market or something, or just play. What do the people play? These video games, or go watch a movie. Watch a movie, and out of the corner of your eye, you can see as you're drinking your wine, you can watch for rogue waves. But you could, you know, if you got the hedge running, you may be curious, how's this working out? And when you're trading $1,000 per ticket, it shouldn't be too much. I mean, if that's too much, you could just go to a nano account. There's like 5 nano brokers out there. You could just run nano tickets and just, they had nano ticket trading in the United States at one time at 400 to 1 leverage. It's hard to believe that it was like 15 years ago. You could trade nano accounts out of Texas, IBFX. It was amazing. It was amazing. That was I thought, at that point, I thought, wow, this is going to be a lot of fun. And then, sure enough, these dumb shit bankers fucked it up. Oh, yeah, the big boys. Those real smart, the ones that manipulate the market, they couldn't seem to manipulate it in their favor. What a joke. When people talk like that, you just have to know they're utterly clueless. It's like people that think the movie you're watching, that there was no edits done. How do you think the world runs? Oh man, these poor people in the Discord talking about, well, seven candles back. You don't understand, man. I get it. Yes, at least you're not over trading. So once again, they're pulling back my dollar yen. How dare they? So yeah, scalping out. I guess this is the answer. If I'm not going to, what I'm not going to do is move my stops. So if I put the hedges on, it's kind of tapping down the risk. It's like having a trailing stop, because you're kind of locking in your profit along the way, bracketing it out a little bit, depending on how tight and what you put in for your stops on your hedge. But if you're going to ride that price pulse and you go, the ride's over, it's okay, we can reload. So the best way to do it is if the market explodes in your favor and you're up on the direction you thought it was going, you see you're coming into the seller's window, just get out of everything that's up, or get out of everything, and just start over again. Start the whole thing over again. So that's the other problem, is that you want to just get into a trade and sit back and go, oh, finally, the market's finally moving in the direction of the major trend. I can just ride this out. it's hard to get that comfortable. I mean, and it's rare that the market's going to take off and just keep going. It's kind of rare. 80% of it's going to be chop and range. You may get a run, but then it retraces. Like, just look at that chart right now. In fact, we're below the initial run on the British pound there. So the waiting for confirmation may be okay on 30% of your total trade, but some of this has to just be a little bit of gut, a little bit of money management, the hedge. Hedge your bet, but you still got your no, I think I know this setup. I think we're there. And then the best thing is to say, yeah, I'm probably a little early. I don't think I've ever not been early to a trade because I can see it coming. I'm like, we're about done tanking, but there's always one last price pulse in there. So the workaround is to accumulate when you say, wow, this thing's like so overextended. Let's get in a little bit at the market, and now let's just say, if it looks like I'm in too early, do I get out of that trade and place a limit in deeper, or do I hold that, maybe even widen the stop on that one ticket? So since all my stuff is 1K, I can have the rule of I could actually move my stop, but I just thought, well, I'll just write a script that has a wide stop. And I know when I pull the trigger on that's a pretty wide stop. Then the rest I could fill in with limits. And you'd be amazed how the market is going to go against your initial, even if you're at the end of the day trader, like no nonsense. You think in Asia they can't tip it down and give you a better price? Tip it up or down? They, them, the banks, the manipulators. Whatever you think's driving that price, it's going to change. It ain't static. And it's trading on a 5 decimal broker, which means there's 10 different prices in one pip. There's a lot of different prices coming down the road, not just the one you pulled the trigger at. And here you got a spread of 1 pip, almost 1 pip, but I'm putting in the commission now, which is like 0.2. And it's it's just dollar Swiss don't move that much. It just doesn't. Well, that beginning of the week stuff here, but this is the consolidation. Everything's getting tight. So the other night on this demo, I had the dollar CAD, dollar yen, and euro dollar, and they were really quiet. And I put hedges on all of them. And the dollar yen never went anywhere. It kind of just like bounced around and filled some stuff, but then the other market went berserk, and it didn't have wide enough targets on it. So it's not a perfect world, but it made money. You just have to say, I got to pick my markets, and I really got to say it's possible we could go extremely one direction, extremely another direction. So extremes are going to happen, and the consolidation of boring noise is coming too. That's always right around the corner. Boredom right around the corner. So anyways, that's my story. I'm sticking to it.